Hey, it is Troy with Doorbell Real Estate, and it is time for our monthly market report. So let's jump in and take a look and see what has been happening in the housing market around East Tennessee and the Knoxville area. Okay, first thing that we are going to take a look at is East Tennessee housing market. Now we are comparing July of 2023. Everything through the end of July 2023 to 1 year ago. So compared to last year, home sales are down 20.9%. Pending sales are down 1.4%. The inventory of homes is down 9.8%. So there are almost 10% less homes available for sale right now compared to a year ago. New listings are down 17.5% in East Tennessee, and the median sales price is up 7.96, so almost 8% higher than it was 1 year ago. But you can see that last month it came in the median sales price at $350,000, and that number has held steady. So basically, same median sales price this month as June. So prices are holding steady, not really going up or down as far as median sales price. But when we look at last month, which is the graph on the left, we can see that's been 2 months in a row where home sales have been down significantly. We went from being just over where we were a year ago in inventory, having more homes, to being 10% less. So that changed pretty dramatically. And again, new listings both months down significantly compared to a year ago. The absorption rate ticked up a notch, saying that we did see a little bit more inventory come on the market month over month. Let's take a look at the graph just so we can kind of get a picture of what this looks like. So when we're looking here, you can see this is the number of active listings on the market. You can see we are considerably lower than we were a year ago. We were up in the 4,000 range, and now we're down around 3,600. So quite a bit less homes available for sale. When we look at the listing prices, active median list price over here on this graph, we can see that it held pretty steady from August of 2022 till about February, and then started rising pretty consistently and then leveled off a little bit over the last month. And then another important thing to look at, which is kind of letting us know what things look like now, what people are seeing now, because when they price their listing now, when we look at new median list price, those are people that have looked at the comps of what has sold, and they're saying, okay, this is where we should be pricing this house now to sell. Meaning if they saw that the market was going down, they would probably price those homes lower to try and get them sold. If they see the market is moving up, they might price it higher, knowing that they can get more money for it. Well, we can see here, looking at the new median list price, the trend for the year is that it was going up, but you can see from May, June, July, it has held basically steady. So that's saying that we're kind of, the market is pretty even and stable right now. Prices aren't going up or down. So that is what that is telling us. All right, let's take a look at the Knoxville, Tennessee market. So this is everything with a Knoxville, Tennessee address. So if you type in the address and send a letter to somebody, it is going to be addressed Knoxville, Tennessee. So when we look at this, home sales are down compared to a year ago, 30.1%. So 30% sales are down compared to a year ago in Knoxville. The inventory of homes is down 22.6%. New listings are down 20.3%. Pending sales are down 7.5%. So you can see what an impact the last year has had on inventory. We have a lot less available for sale now than we did 1 year ago. The median sales price is up 7.86% and is coming in at $380,000. That's less than where it was last month. Last month, the median sales price came in at $400,000. That could be the result of some big sales. Also, typically this time of year, we tend to see prices start going down as we kind of heading more towards coming out of the summer months, heading in spring months and heading more towards the winter months. That's a typical seasonal thing that we see. But still, we are 7.86% higher than we were 1 year ago, with the average sold price per square foot coming in at $209 a square foot in Knoxville. When we look and compare it to last month, which is the graph on the left, home sales were down both months considerably. Last month they were down 21%. This month we're down 30%. Inventory of homes last month was down 11.5%. This month we're down 22%. So basically double the amount down. So we're seeing less and less inventory on the market. New listings were down 22.5% last month. This month they're down 20.3%. So just not seeing a lot of new listings come on the market, and it is driving that overall inventory of homes number down. But that being said, when we look at the absorption rate compared to last month, it ticked up a tiny bit to 1.17 months worth of inventory compared to 1.07. So we did see a little bit more inventory come on the market this month, end of July compared to end of June. Let's take a look at some graphs here for Knoxville. So when we're looking here, let's just look at the active number of listings. You can see compared again to last year, we are significantly lower. This is where we were last year. This is where we are now. Significantly fewer homes available to purchase. When we look over here, the active median list price, when we look at the trend, obviously prices are trending up compared to last year quite significantly. And when we look at the new median list price, here you can see that it was holding pretty steady from August to about December, and then it started moving up, and then got up to around close to that $400,000 price range for the new median list price, and it has basically held steady there from February all the way through the end of July. So the new median list price is really not rising much and staying steady, saying that prices over the last few months aren't jumping up, aren't jumping down. They're basically just staying steady. Let's take a look at some other data for Knoxville. So this graph here will show us, this big graph shows us what the market action index is. So that tells us whether we are in a seller's market or if we are in a buyer's market. Well, because this is at a 60, that's telling us we're still in a strong seller's market, and that is because inventory is so low. If inventory wasn't low, if we had a lot of inventory, obviously the law of supply and demand says if inventory is low and demand is high, then prices are going to rise, and then the opposite holds true. If we had more inventory, we probably wouldn't we'd probably see prices going down simply because, like we said, they're holding steady over the last 4 months. And the reason that they're holding steady and maybe ticking up a little bit here and there is because there's just not enough inventory on the market to fulfill the demand. So when we look over here on the right side, the real-time market profile, this gives us a 3-month snapshot of what is happening in each of these areas. So it's good to look at the whole graph over the 3 months to see which way it's trending, and then also kind of to look at the very end and see what's happening over the last couple weeks. But when we look at the median list price, we can see that this is kind of over the last 3 months is kind of trending down and then has been holding steady over the last few weeks. Again, like we just saw, median list price of new listings has been basically holding steady, like we said, over the last 3 months. 3 months ago, it was at 400. As of August 4th, it's basically 400 still, 399.9. So prices really aren't moving one way or another, holding steady. Price per square foot has trended down over the last 3 months for active listings, and everything that we're looking here is active listings, what is currently on the market now. So that number has trended down a little bit over the last 3 months. with the average price per square foot or median price per square foot of homes on the market being $217 a square foot in Knoxville. When we look at the median days on the market, it has actually trended down a little bit over the last 3 months, but you can see it ticked up a little bit here over the last week. But basically staying in that 1 month range, basically. So it was 35 days at the beginning of back in April, and as of August 4th, it was 28 days. This next one is super important to watch. Price decreases. That means are more homes that are on the market, are there more price reductions or are there less price reductions? Well, if we look at this trend line, it's basically flat, but then over the last few weeks here, it started to trend up. We're starting to see more price reductions. So that could be telling us that some people may have been a little too aggressive on their pricing, and we'll look at that closer here in 1 minute. Inventory has trended up a little bit over the last 3 months. Median rent has trended up over the last 3 months. And then basically the market action index, 3 months ago we were at 59, today we're at 60. So basically that's holding steady right there, basically still saying that we're still in a strong seller's market. So let's look down here at this graph in regards to the median list price. This is since 2018, and it just can kind of show you. But one interesting thing to see when you have this long trend line from 2018 until now is where the heights are. So typically you get your highest prices in June, July, August, because that's the top of this graph here, and then it's high here. So this is August, September. Then we go up here. This was in 2021. You've got June, July, August up here at the top. And then you go here last year, June, July, August. And then right now it started a little bit early. It was in May, June, and then things are starting to trend down a little bit as far as pricing goes. But this is when we're looking at all of the houses and house prices lumped together as one. It's helpful, especially when you're looking for your specific situation, to break this down into different price segments because things happen differently in price segments. So when we break it into price segments, what this does is it breaks the entire market and everything that's currently available on the market, and it breaks it into 4 different segments, 25% of the market in each section. So you've got the low section, the next section, and then you've got the high section up at the top. So and these are the 4 sections that it breaks those median prices into. So the median price of the lowest section in Knoxville would be $259. That tells you on average it's getting you about 1,200 square feet, 3 bedrooms, 1.5 baths. The next price segment up would be $417. The median square footage there is about 2,100 square feet. That gets you a 3, 2.5. Also tells you about the age of the house that you're getting as well here. The next segment up is 6,035. That's getting you closer to 3,000 square feet, a 4-bedroom, 3-bath, about 25 years old. And then the upper section in Knoxville is coming in at a median price of about $1.2 million. That's getting you about 4,200 square feet, 4 bedrooms, almost 4 baths, and that also is about 25 years old. But when we look at the median list price, obviously this is over time. We want to zoom in and kind of see what's been happening over the last, if we say this year, we can zoom in. When we look at this lower price segment, at the beginning of the year, we were at about $260, and that's held fairly steady. And right now, it's about $266. So you see it from January until August, it's gone up about $6,000, but not a huge price jump. Stayed pretty level so far this year. This next segment up started at $377. And you can just see based on this line that it has moved up a little bit as well. So that's gone from $377 to currently $425. So that segment has risen pretty good over since the beginning of the year. This next segment up started the year at 522 and rose and is currently at 616. And then the upper bracket started the year at around 787, and that rose considerably. You can see up to 1.1 million. The other thing to keep in mind with price segments is in looking to see what the desirability or the demand is for that particular price segment. When we look here under new and absorbed, we can see how many new listings came on in those segments within the last week, and then how many have been absorbed. So if the absorbed number is bigger than the new number, that tells us that there's quite a bit of demand in that particular segment. If it's the opposite way, there's less demand. Not that there isn't demand, but there's less demand. But here you can see in the low price segment, 38 new listings came on the market last week. 40 were absorbed in that segment. The next one up in that 417 range, 42 new listings came on the market. 46 were absorbed. Definitely demand, big demand in both of those segments. This third segment, the 6035 segment, that one had 30 come on the market, 17 were absorbed. So you can see there's a little bit less demand in this segment. So buyers in this segment may have a little bit more wiggle room in negotiation than those people in this lower segment here. And then when we look at the upper segment, 13 new came on, 12 absorbed. That's pretty even. One of the other things I want to look at before we move on from here is the price decreases and see how that has looked. So from the beginning of January, we were seeing a lot more price decreases in especially the lower 90 day, which was the 417 bracket, but that has dropped significantly from 55%. That was saying that at the beginning of the year, 55% of the homes on the market in that price segment had a price reduction. And then here, almost 50% in both of these segments had a price reduction. So we saw a lot of price reductions between February, less in March, less in April, less in May, less in June. They kind of bottomed out in July, and then they're starting to tick up a little bit more here in August, but obviously considerably lower than they were at the beginning of the year. So there is that as far as what is happening in Knoxville. Let's take a look at the counties real quick. So we're looking at Roane County. Available inventory in Roane County is down 12.9%. Pending sales are down 10.4%. The median sales price in Roane County is up 6.12% compared to last year and coming in at $298,250. And the median sold price per square foot in Roane County is coming in at $165 per square foot. In Knox County, available inventory is down 22.1%. Pending sales are down 6.2%. The median sales price in Knox County is up 6.29% and coming in at $372,000, with the median sold price of a home coming in at $207 a square foot in Knox County. In Anderson County, available inventory is down 14.7%. Pending sales are down 14.6%. And the median sales price is up 5.09% and coming in at $289,000, with the median sold price per square foot coming in at $174 a square foot. In Loudon County, available inventory is down 14.9%. Pending sales are up 4.5% compared to a year ago, and the median sales price is up a whopping 39.38%, almost 40% compared to a year ago, and coming in at $532,450 in Loudon County. And if you've watched my videos before, you know that I say a lot of that is because of Tellico Village and the effect that it has on the pricing in Loudon County, because it's a community that has some higher priced homes compared to the rest of the county, but it can definitely affect the median sales price. In Sevier County, available inventory is basically flat, the same as it was 1 year ago. Pending sales in Sevier County are down 34.1% compared to a year ago, so down significantly. The median sales price is down 6.9% and coming in at $540,000, with the average sale price in Sevier County coming in at $321 a square foot. I think I skipped over Loudon County's median sales price. That came in at $221 a square foot. And then finally, Blount County, available inventory is down 13%. Pending sales are down 17.6%. And the median sales price is up 13.79% and coming in at $397,000, $397,125, with the median price per square foot of homes sold in Blount County coming in at $218 a square foot. So just by a quick glance, you can see where you can get the most house for the money as far as price per square foot. That would be in Roane and Anderson counties. You can see where the lowest median sales price is, also in Roane and Anderson County. But obviously all of these counties are desirable because median sales price in all of them is continuing to rise. Okay, so that was a lot of information. Hopefully that is helpful. I just want to go ahead and do a quick summary of the East Tennessee housing market updates and what they mean for potential home buyers and sellers. So by the end of July, which these numbers looked at, the number of available homes for sale is down 10 to 20% compared to last year, depending on the area that you're looking at. So this is mainly because there have been fewer listings, and we can see from what we were just looking at that most are down 20%. New listings are down over 20% from the previous year. So on the topic of inventory, there was a small increase in housing listings over the past month, but it's not as much as you'd typically expect for this time of year. As of July's end, there were more listings compared to the previous month, but across all counties in East Tennessee, inventory levels are still well below what they were before the pandemic hit. And one of the reasons for that is what is being called as the lock-in effect, where folks who might typically be putting their homes on the market are choosing to stay put because they're locked in to a super low mortgage interest rate that's considerably lower than today's rate of around 7%. With the historically low rates of the last few years, most homeowners are sitting on interest rates below 4%, many below 3%, and this is keeping their mortgage payments very low, and most aren't motivated enough to change that, especially in an inflationary environment where prices of other things are rising. So let's talk about renting real quick. So if you're thinking about renting an apartment in the Knoxville area, prices have gone up by a noticeable 9.6% in the second quarter of 2023, which is quite a bit higher than the national average, which was only a growth of 2.3%. So the Knoxville market is growing considerably faster as far as rents than the national average. Knoxville is also making a name for itself in the housing market game. It's among a handful of cities in East Tennessee that are expected to experience stable growth in their housing markets this year, per a recent list put out by Go Banking Rate. And speaking of Knoxville's housing market, it snagged the 12th spot on the Wall Street Journal Realtor.com Emerging Housing Markets Index. This list highlights cities in the U.S. that not only have a strong housing market, but also a thriving economy. So let's address the big question. Is it a good time to buy a home given the unique housing market situation? Well, generally speaking, yes. In East Tennessee, the number of homes available is still about 50% less than before the pandemic. There's no major influx of new supply on the horizon, kind of talking about what the lock-in effect, nor are there going to be a bunch of foreclosures hitting the market, because why would that be? Let's think about it. If prices rose so significantly over the last 2 years, that means everybody that has owned a home over those last 2 years is sitting on a significant amount of equity. So why would they foreclose? Why would they not just put their house on the market and sell it? So there isn't a big glut of inventory coming on the market that is going to make us see a lot of homes hit the market. That would be the only reason we would see prices fall significantly, is if we saw a lot of inventory come on. So the scarcity is likely to push home prices up in the coming year, especially in areas like East Tennessee that are experiencing a lot of people moving in, which we are still seeing a lot of people moving in from other parts of the country. So let's do the math. Assuming home prices grow by 5% over the next year, as forecasted by East Tennessee Realtors, even if interest rates were to drop to 6.4% by next year, monthly mortgage payments would still be higher a year from now with the lower rates. Not to mention that if you buy now at the lower price and mortgage rates fall, you can always refinance at the lower interest rate and lower your monthly payment even more. So if we think prices are going to rise, it makes more sense to buy now than to wait for interest rates to drop a little bit, because ultimately, as far as payments go, mortgage payment, you'll be paying more later than you would now. So on to the Federal Reserve. After a short break, they decided to bump up interest rates once again in July. This is the 11th time they've done this since March of 2022. As a result, the benchmark federal funds rate is now at its highest point in over 2 decades. So let's talk rates. Mortgage rates went up during July, according to Freddie Mac's primary mortgage market survey, and the 30-year fixed mortgage rate as of today's taping is 7.05%. This same time last year, the rate was 5.18%. So we're almost 2 percentage points higher now than we were a year ago. So looking ahead, things are interesting. Even though inflation has improved, it's still higher than the Fed's desired target. The U.S. economy is adding jobs despite higher interest rates, and the unemployment rate is impressively low. Given the recent rate increase by the Federal Reserve and the economy's resilience, we can expect mortgage rates to stay in the range of 6.5% to 7% for the rest of the year. So keep that in mind. If you're a first-time home buyer, I recently released a video talking about the updated THDA loan program that offers a lower interest rate and down payment or closing cost assistance for qualified buyers. So be sure to check that out. That could be something that can help you get into a home now with a rate that's significantly lower than what most people can get. So I hope this update's been helpful. If I can answer any questions or serve you in any way, don't hesitate to reach out. My team and I would love nothing more than to help. I look forward to talking to you soon. This is Troy Stavros with Doorbell Real Estate.